Hello, everybody, and welcome to the Gold Rush. We usually do this show on Thursdays, but we are doing it on Friday as Jason and I just returned from the Stock Market Media Portfolio Accelerator event in Miami, Florida. Man, was that a great time, Jason. I had a blast. Probably the nicest hotel I've ever stayed at. I ate some of the best food I've ever had in my life. Had some amazing conversations about the market. And I was there in Miami for the National Football Championship, which was played in Miami with Miami in the championship. It was a really special time to be in Miami, and I yeah, I miss it already, Jason, but we are back to work, back at our desks, and I want to give a shout out to Jerry, who we met on Monday night at the. We had a little party for the national championship game, and man, Jerry has been in our community for quite some time now, and he made a special trip just to see your boys, Sam and Jason, and that was really special, and that meant a lot to us. So, huge shout out to Jerry. Thank you for doing that. It was great to meet you, and I hope to meet you again sometime. Jason, what were your takeaways from the Portfolio Accelerator in Miami?
A lot of interesting things. One is awesome time. The hotel was great, great people. We got to go on a yacht and have dinner, which was really nice. That was a really good setup as well. So
That
there's a
was my
bunch of
first yacht experience.
really
I
nice. Yeah,
hope I hope to have more in the future.
I'm on them every other day, so it's usual for me.
All
Just
right,
kidding.
all right.
Just kidding. But
Settle
no,
down, Jason.
it was a good time though. It was really good. It was a lot of fun to hang out with the team. A lot of good people there. Jeff Weiss was a lot of fun. That was cool.
Oh my God, Jeff
Brother was
Weiss is
cool.
the man.
Yeah, yeah. I mean, your brother was cool. That was really fun. He was a great dude. I've talked to him over the years, so it's cool to meet him in person. As always, it's always good to meet people in person, like Jerry coming in. That was awesome. So we appreciate that. But also, the presentations were great. Something that I found very interesting is everybody in the world thinks silver has topped. Um, doesn't mean I know where the top is. So don't take it from me going, oh, everybody feels that way, so I'm thinking something different. I'm just feeling like I have no idea. Like that's how I always kind of feel about trading. It's like I have no idea. I want to be long. I want to continue to have the positions I have and ride them until the trend bends and breaks. That makes sense in this type of environment. But I also see that everybody's like, it's going to top. When that usually happens, I'm like, I don't know. I feel like too many people are still betting against this. And I don't know when the sentiment will shift for silver, Sam. That's the craziest thing I'll probably say today, which is like it's all the way up at $100 and I'm like, when does the sentiment shift? I have no idea. So we'll
I
dive
think
into
it
this
comes
a bit
down to
more.
positioning, Jason. Like we still have not seen extreme positioning in the COT, and
No.
until that happens, I think we'll get corrective waves. There will be consolidations. It's not going to go straight up in a vertical line forever, but I don't think we'll see the top until positioning changes and it's max crowded long. And that's just not the case today, which is shocking considering what has happened here. It's like you said, everybody wants to call the top in silver. It's humans are crazy, Jason. Why would you not just ride this trend higher? I mean, we are making so much money just sitting on our hands doing absolutely nothing.
It's fun. It's nice. And that's what you're supposed to do as a trader is to just I mean, once again, so let me say this differently. It's not fun. Nobody wants to sit on their hands and watch a trend just move. However, that's how you make the most money. You try not to control it. You try not to get in and out. Use price targets, levels, and so on. Like these work a lot of the time, but when you have a crazy move like this, especially in commodities, and I always say that this for commodities, they don't tend to respect the smaller commodities. Oil, if you're looking at gold and so on, but the smaller commodities, like if you're looking at silver, palladium, platinum, all the way to cocoa and so on, they will blast through a lot of these price levels and never look back. We've been seeing that happen in a lot of the different commodities. Now, silver is kind of doing the same thing. I think that's going to continue until a certain point. What's the net? Well, we'll go over that in a little bit because I know Sam's got some targets that he'll definitely highlight, but we'll talk about that in a bit.
Totally, Jason. I really wanted to start today's show with slide number two. My good man, Gene Gote, if you will throw that up there. And by the way, shout out to Gene. We got to meet Gene in Miami at the Portfolio Accelerator event. You know, we've been working with Gene for years now at this point. He is behind the scenes doing so much work to make this happen, and it was such a pleasure to meet him in person, and I hope to do it again because he is awesome. All right, Jason. So slide number two is natural gas futures with the best 5-day change ever. Never in history has natural gas gone up this fast. And, you know, I'm no meteorologist, but I know that natural gas, more than anything out there, trades with the weather. And here in the Midwest, it is cold. And I don't think many people were expecting this, Jason. So, do you have any insights into what's going on there, or just line go up?
Line go up. I mean, like there's always these spikes every year in January, and here's the only insight I really have. We're seeing this mainly in the front month contract. So as we're seeing this mainly in the front month contract, what that's telling me is that this move is probably a little bit more short-lived than people want to believe.
It just has to do with the weather. It's not a significant long-term
Yes.
thing.
Yes, and so like we're going to see this move. Short-term traders, you can make some money in the front month contract, but the longer dated contracts are not moving in the same way. And honestly, we see this every year around this time. Every single year, you see this big move happen,
But
and
we've never seen it like this, Jason. Never.
we've seen it to certain degrees, but you're right, we haven't seen it like this. But usually, there's a big move and disparity from the front month contract to the later contracts. So, is this a start of something? It's possible. Will I take a long position? Yes. But once again, I've had this same scenario kind of happen from time to time where you have this big spike and then nothing really comes of it. But once again, I think we are in an environment where that's very bullish for natural gas, but natural gas is going to do whatever it wants to do. So I'd say be careful here if you're just like, trying to buy this based on what the price action is doing in the front month contract. Look at the further dated contracts. Maybe that's an area where you're interested in being in. But the front month contract, I think, will come back to equilibrium at some point pretty soon.
Totally, yeah. And I think it's also, I didn't bring along the chart, but it's worth noting that the positioning is wildly offside in natural gas futures. If you look at the speculator positioning, they have not been this net short in years. And historically, when that happens, you see some of the strongest uptrending moves in natural gas futures. So, you know, I think it certainly has a lot to do with the weather, but that offside positioning is a very, very nice tailwind as well. And I'd like to give a shout out to Friday's Commodities Weekly column that we published a week ago. And for those of you that are Gold Rush members, go check out the trade idea we highlighted there. One of them was a natural gas stock, and it is breaking out to new highs. And I think that one's going to be one of the biggest winners in energy this year. And it's kicking off this sweet new uptrend with this move in natural gas futures. And we titled today's episode of Gold Rush Live ExxonMobil to $1 trillion. And this was really the thesis of last week's Commodities Weekly column is ExxonMobil is decisively resolving this prolonged multi-decade accumulation pattern and breaking out to new all-time highs. And Jason, ExxonMobil is about a $550 billion stock today. I think it could very easily double from here and get to $1 trillion. And with the current outstanding shares, that would be $237 per share, would equal $1 trillion in market capitalization for ExxonMobil. And I think that would be a very, very big deal, not just for, ExxonMobil shareholders, but ExxonMobil is the largest North American energy stock out there, so it carries a significant weight in the S&P 500 energy sector. I think ExxonMobil and Chevron together make up about 50% of the energy sector, which is pretty bizarre. I mean, people love to complain about, how large Nvidia, Apple, Microsoft are in the tech sector, but it's even more dramatic in the energy space. Same
Yes.
for materials as well. So yeah, and energy is such a tiny fraction of the S&P 500 today. So if Exxon's gonna double from here, I have a hard time believing energy's not only gonna outperform the S&P 500, but it'll be a much larger part of the S&P 500, like we've seen in the past.
No, I agree, and I think that's we're gonna see a big shift here. Is it gonna be a point where like some people call for this to completely shift and technology will be 3% of the S&P 500? I don't think that's happening anytime soon in the United States, but I do see a shift moving into, hey, we're gonna start to see some of these companies that people thought were dead that honestly we use every single day still start to move higher quite a bit. Not to mention, if oil is moving up, it's really going to put a lot of pressure on things like Exxon Mobil to continue to move up as inflation's moving up and so on. Not to mention, Exxon Mobil is incredibly diversified. They have money in just about everything in the energy space, from coal to metals and so on. So I do think that they're going to really benefit from higher oil prices here more than just about anybody else. So we could see this having a major move going forward and that money continuing to rotate into the energy space.
100%, Jason. And it's not just ExxonMobil that's ripping the new highs, but if you look at the bellwethers of energy, so we have ExxonMobil and Chevron, Shell, Total, but we also have some like uranium, some CCJ, some coal with the ARLP, some solar. We have First Solar in this equally weighted energy bellwether index. And you're seeing all of these stocks work, Jason. So, whether it's clean, semi-clean, or just super dirty coal stocks, we're seeing everything in energy work. And I think energy is about to break out versus the S&P 500, Jason. We've been pointing this chart out for a very long time, and it just has not worked. It has been rejected so many times, but I think today is finally energy's turn. I mean, we're seeing significant changes. Back when it tried to break out in November, ExxonMobil was not breaking out to new all-time highs.
No.
That is a very big deal for the energy space. And granted, this is an equally weighted look at energy versus the S&P 500, but I think it's hard to overstate how important ExxonMobil breaking out is.
No, I agree. I think this is the time. And once again, like we saw the move last year start. At the end of last year, November, December, we saw the crack spread start to widen, meaning the refiners were and the refined products were basically outperforming the underlying asset, which is oil. We start to see that start to move. Very interesting. And then it kind of just moved sideways for a little bit, but the energy stocks never really died off. And then next thing you know, the stocks start to break out. Venezuela situation happens. Basically, that market bottoms right there. So very interesting things that are kind of coming into the energy space currently, which is making me think this is a real move. I don't want to bet against it. I think this is going to continue. I think now's the time to continue to make a lot of money here. I think we'll continue to find trades here and keep putting them out and keep talking to you guys and our members about it going forward.
Totally. And Jason, we spent this morning having a conversation about bonds with our good friend, Mr. JC Peretz. And, I'd like to give a shout out to JC. So Jeff Hirsch was supposed to come to the Portfolio Accelerator event in Miami, but he sprained his ankle, so he wasn't able to make it there. And anyways, he sent us all Stock Traders Almanacs, the 2026 edition, and I got mine autographed by the one and only Mr. JC Peretz. I don't know if you guys can see this. Right here, JC's signature. Jason, I think this could be worth a lot of money one day. I'm betting on JC. I think JC is the GOAT of technical analysis, and you know, I think this could be $1,000 one day. What do you think, Jason? Was that a good move by me?
I mean, it's always a good move. One is like I think it's always cool to get like different autographs from different traders that
Yeah,
you look up to. I found my uncle did that with a lot of people. I found it really cool to kind of look through his stuff as the years went on. And then for me, I always get like random stuff once in a while from different people I've looked up to over the years. If there's a book that really like fascinated me, helped me in my tradings, whatever it was, then I usually ask for their autograph or something. Just to have it, memorabilia, nice stuff. Some of them are like peer friends, some of them are people I look up to, some are people I've never met. I've had people like I've sent books to people and been like, hey, can you sign this? Send it back.
That's
Yeah,
awesome.
yeah, some big name dudes, and usually people are pretty cool about it, which is interesting. So yeah, no, I agree. I think it's always good.
We have such a cool community here in finance.
Mhm.
In some other industries, the big players are just assholes and they'll laugh at you if you ask for their autograph. But you know, we have a great community here, and I'm very grateful for that. I don't take that for granted. But anyways, Jason, we got off topic. We were talking about bonds this morning. So tell us, are bonds about to break down with energy breaking out? I mean, that has been the relationship for years now. Is it different this time?
Yes, I think that's exactly what's going to happen. Not different this time, as in it's the bonds are going to break down and the XLE is going to break out. Everybody keeps telling me, like, and I'm a person who does say never. So I appreciate that people say that back to me. However, this is a relationship that would make zero sense if we saw TLT really rallying and energy stocks rallying with it. Short term, people will send me like a 1 day thing. They'll be like, oh my God, do you see the rally in TLT today and XLE? Sure, short term, those things are going to happen. Long term, the structure should continue to move inversely from each other. And you see that time after time again. And even at certain periods of time where they start to get a little bit correlated, it dies off very quickly. So I wouldn't think that that's going to be the case. For me, I really want to see this breakdown in TLT. That's going to give me a lot more conviction on the breakout in XLE. So I do think that we're probably headed lower in TLTs right now. I know a lot of people don't want to hear that. A lot of people think, oh, it looks really cheap here. Oh, this can happen. Sure, it's possible, but the higher probability bet will be TLT moving to the downside, even if you just looked at nothing but the chart. It's a primary downtrend in TLT. TLT is consolidating. TLT is hitting the bottom of that range a lot more than wherever the top end of that range really wants to be. It's a descending triangle, if anything, or a bear flag pattern.
Oh, speaking of triangles, Jason, you brought along this chart.
Yep. So in the opposite direction, here's another triangle. So looking at Reuters, that's the CRB index, and against the 3 month to the 10-year yield. So if we're looking at the yield curve, it's basically pointing to that this is going to move to the upside. And these breakouts are usually explosive. You guys have seen me highlight the band squeeze setup a million times on this, but we are right at the end of it. This is a long-term chart. It's a monthly. So when this thing breaks out, you're going to really want to be in energy, oil, gasoline, whatever. This is really going to make a big move to the upside. So keep an eye on this and keep an eye on those energy stocks because they're all set up in a very tight squeeze pattern. And something's going to resolve one way or the other. And I'm still betting on the upside here.
So, Jason, I'm a young man. I do not own a house. Is now the time to swoop on a house and a 30-year mortgage? Is this the dip? Am I buying the dip?
Here's the thing that's going to be hard to understand about the mortgage market or basically the housing market is if you're going to buy a house, let's say, if we break down in TLT, which means a breakout in the 30-year bond, meaning mortgage rates will go higher. I don't think that scenario and I don't think it ends with higher housing prices. I think that scenario ends with much lower housing prices. So it's a hard one to say like if you're looking for the rate, maybe now's fine. And you can refinance later or whatever. If you're looking to buy a house based on value of that house, I would say that 30 year is going to put a lot of pressure on the housing market. If that 30-year continues to move higher and let's say we see 6%, we see 7%, there's going to be some major pressure on the housing market. It has been a lot of people have been saying that for years. I haven't been saying that at all yet because we were historically low. Now we're getting to that point where it's like, okay, this is going to put a lot of pressure on that market, and there's going to be something that busts at some point. And already we're seeing some cracks in housing where the price is already starting to fall down. So, long story short, Of course, I'm a psychopath, so you guys know I've already thought of this. But yes, I think housing prices will go lower. I think mortgage rates will continue to move higher.
Interesting, Jason. And we have a comment here from Bub D Dub in the chat here talking about natural gas futures. So we started the show talking about this and how natural gas is having its best multi-day run ever in history. And we talked about the weather and the positioning, but Bub D Dub mentioned the negotiations between the US and the EU over Greenland beginning. So do you think that has any effect on this, Jason, or just a coincidence?
Now, once again, I think it's close to coincidental at the moment.
That's kind of where my head's at. Yeah,
Yeah, yeah. But I mean, once again, it's like who knows exactly what the real news is going to be for that whole situation? Who knows how it's all going to shake out and so on. But there is something to be said, and this is the reason why Sam and I watch the price action, which is somebody somewhere always knows something. And if that's the case, and you're right on this one fact, which I don't know, I'm not saying I feel the same way. Just saying if you're right on something, it's going to show up in the price in the first place. So it's possible.
totally. Yeah. All right, Jason, I wanted to get to this image that you brought along today as well. There's a lot going on here. So walk us through what we're looking at.
So this is a yield curve and how it tells you where to invest. So for me, I'm always kind of looking at this type of chart to get an idea. I'm always looking at the yield curve to get an idea of where to position. So I kind of made a slide for our event this week just to kind of show people where capital should go, where it should run to during certain periods of time, and then how I would invest in it. So when I'm looking at something like this, I'm getting an understanding of, okay, the yield curve is steepening. That means growth is accelerating or inflation is rising. It could be a little bit of both. So when I see that type of environment, that's usually telling me, okay, well, I think metals will start to move. Either gold will usually start to move first as it's flat coming out of inversion and so on. And then as the yield curve continues to steepen, that's an area where we start to see the other metals where we got whether it's copper, iron ore, aluminum, nickel, all of these things will start to move with that as well. So that's the type of environment I want to see there. If we look at the other part of the curve where we say, okay, growth is inverted or growth is slowing, inflation is falling, that's a risk off regime, that's usually an area where I'm like, okay, I want to own bonds. I don't want to own commodities. I want to own dollars. Maybe I want to own really big growth stocks. Maybe I want to own staples, maybe utilities and so on. This is how I kind of look at the market and get an understanding of where I want to be positioned. You guys always hear me talking about regimes. This is kind of how I put that together and understand where I want to be positioned in the market at the time. Currently, it looks a little different, which is we're coming out of an inversion, and now we're in an environment where the metals and mining look great. The gold miners have been great. This is part of the thesis and why I always bring that same chart of gold and the yield curve every single other week, because it's an idea that is long lasting and we get to see the effects of that for a long time, and it makes a good structured trade that can make us a lot of money.
Frey Lee in the chat says they like this chart.
It's
This
a
is a
good one.
great chart. There's a lot going on here, but when you break it down, Jason, this is very helpful. This is like a cheat sheet for your homework.
Yes. And that's why I think like people screenshot it, take it, send me a message. If you don't have it, I'll send it to you. But this is something that you can continue to get an understanding of how you want to use bonds to position yourself correctly in the market, and also how the yield curve works. A lot of people don't know. It's kind of hard to understand at first, but over time, like you really get to look at it, get an understanding of it. It can tell you where you want to be in the stock market. It can tell you where you want to be in commodities. It can tell you what currencies are doing. It can tell you everything you need to know about positioning yourself well and where you should be taking buy and sell signals.
Totally, yeah. And just aligning yourself with the current macro environment is paramount.
Mm.
If you are fighting this trend in precious metals, I mean, what a terrible mistake. Like that is totally not the move. We want to be aligned with the trends. So I think this goes a long ways in helping you do that. And speaking of precious metals, Jason, I wanted to finish today's show talking about some significant milestones in the metals. So silver futures are crossing above $100 for the first time ever today. And man, what a move. I mean, can't stop, won't stop. And I think the next stop, I said stop a lot there, but 111 is what has my attention in the silver futures. I think we could see a consolidation there. You know, the price stalled at my first target for I think it was like 3 days maybe. So, you know, I'm not saying silver is going to top at 111 and then crash back to zero, but I think the market will react to my Fibonacci extension level there and how long it takes for that overhead supply to be absorbed by the market will give us a lot of information as to how strong this primary trend is and how much higher we can go. And, you know, I think, Jason, we could see silver go to, 150 in 2026. I think it has the potential to go significantly higher, and maybe 150 is low. Maybe we're talking $200 silver by the end of the year. But, this continues to tell us that this underlying primary trend is very, very strong here in silver as it's crossing above $100 for the first time. And we have, at the same time, we have gold flirting with $5,000 for the first time ever. And it's really fascinating to me how nature does that, Jason. Significant round numbers like that, $100 in silver, 5,000 in gold, pretty much at the same time. Is that a coincidence? I don't think so. But for Gold Rush Premium members, we've been talking about 45.30 as a key level of interest in the gold futures. Above there, I think the path of least resistance is higher towards 6,300. But you could also look at the Fibonacci extensions like this from the prior cycle. So above 47.60, the path of least resistance is higher towards 7,000. So, maybe the price just ignores the 6,300 extension and goes to 7,000. Maybe it doesn't. I don't know. But these are the key levels of interest that have my focus right now in gold and silver futures. And with that, Jason, let's wrap today's show. This was an awesome episode. We covered a lot today. I love it when we, go from energy to bonds and then precious metals. We do it all here at All Star Charts Gold Rush. We cover bonds, stocks, commodities, currencies, and we cover not just the futures contracts, but we're constantly looking for the most asymmetric setups in the individual stocks, and you can get access to all of this for $12.99 a year with a 30-day money-back guarantee. For more information on All Star Charts Gold Rush, you can click the link in the description on YouTube. And before we go, I'd be remiss not to ask for a like and a subscribe to our channel so we can continue bringing more awesome content like this to you all. I see we always have a very lively chat. Everybody seems to appreciate us, Jason, but we don't get that many likes. So if you are here and you like what we're saying, we'd very much appreciate it if you could like and subscribe to our channel. And thank you all for being here very much. Really appreciate it. And if you are in the Midwest, try to stay warm out there. We were talking earlier before we jumped on this show. I'm just going to eat a bunch of berries this weekend and hibernate like a grizzly bear. What about you, Jason? How do you spend these times of the year when it's just way too cold to do anything?
Sam, I'm a fucking Clevelander. So for me, it's more like the Cleveland winters are terrible. We're right on the lake. We always get a ton of snow. I really have no idea usually. This would have to be something insanely bad for me to even change anything. So I'll probably go to the gym, play basketball tonight. I'll probably do exactly the same thing I do most weekends. I really want to go ride in Cleveland this weekend, but I don't know if I'm going to be able to do that. But I'm going to give it a shot. So I'll let you guys know on Monday. If I'm not here, and stuck somewhere, Sam can update you guys on if I'm alive or not.
Sounds good, Jason. All right, everybody. Thank you for being here. Have a good weekend, and we will catch you all next week.
Later,
Adios.
guys.